This is our Forex blog for July 25th, 2012, and like we do most days, we use our currency meter to find the strongest and weakest currencies, and we buy the strongest versus the weak and the weakest versus the strong. We have the real-time trend in histogram form on the top, 15-minute trend, hourly, daily, weekly, monthly. A lot of times trends go up or down 2, 3, 5 days in a row, then they reverse, and you can have a currency like the yen today that's very weak. However, you can see the weekly, monthly trend's quite strong. You know, anytime you have statistical weakness in one currency and strength in another, you can find opportunities for that trend to continue. You can see the dollar, the pound, and the yen are the three weakest. The Australian was quite strong today. So one good opportunity, and the first step of our three-step system, is find the best currencies to trade. Focus on the Australian dollar by buying, pound Australian by selling, and also by buying the Australian yen, which was also weak today. Let's start with the Australian dollar, since this one's got the most time frames up. You can see incredible statistical strength right here. Even though this currency went from underneath to above the hourly and is kind of going sideways like this, just because this currency is not the strongest one at the particular time, by looking at what other Australian pairs are doing, or in this case also other dollar pairs, you can see incredible strength. And so when it breaks out right here, you know it's very high probability trade to buy, and of course it goes up. You can see every little pullback today, up, 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 up. Deeper pullback, if you would have bought right here, you might have had a small loss. Bought the next pullback, and again, it exploded up. So that's, in a nutshell, how to use our currency meter. Let's take a look at the Australian yen. Also one to be looking for buys. You can see incredible strength today. Anytime you have up moves with strength at or above the 80 line, and then pullback moves where there's not that much weakness, those trends are very much likely to continue. You can see this pullback right here led to a nice move up. If you bought this pullback right here, you probably had a small loss. This next pullback, went up from 30 all the way to 70. It's a 40 pip move. 10 pips per day doubles your account every 2 months. It's 50 pips a week, 200 a month. Every 400 pips, if you're risking 2% of your account per trade, doubles your account. So anytime you see, high odds trades, not all of the trades are going to work, but your wins, the goal of trading is to have bigger wins and losses, and also to try to have as high a winning percentage as possible. But catching big wins and having small losses is the most important aspect of trading. Let's look at some of the other pairs today. The pound was weak. Now, you wouldn't want to necessarily trade the pound against the dollar or the yen because all three of them were weak. You're not likely to have much, explosive moves. You can see the pound dollar for most of the day, down, up, sideways, down, down slightly, up, sideways, down. Obviously if it's underneath the hourly, it's much more likely to go down. When it's above the hourly, let's scroll back and find an opportunity in the past. Well, since I brought this up on Sunday, it's pretty much been trending down underneath the hourly moving average. So the trend has been down since I've had the charts up. You can see a little bit later today, once it broke from below to above the hourly right here, the trend continued. The pullback trade also went up. But for the most part, you want to trade the ones that are strongest versus the weakest. The pound never really had much strength. So, when the dollar had a lot of weakness again here around 11:30, you wouldn't really want to be buying the pound versus the dollar at that time. You're better off finding a currency like the Australian that was strong all day and looking to buy the Australian dollar over the last few hours. And as you can see, from that same time around 1 o'clock, this one went up from 90 all the way up to 30, went up 40 pips versus the pound dollar right around the same time at 3 o'clock. It went up pretty much right around 5,500 to 5,520. This one moved half the number of pips up that the strongest one did. And the only reason that the pound dollar even moved up at all is because the dollar was super, super weak. It wasn't the strength of the pound moving it up, but just simply the weakness of the dollar. And that's what the currency meter helps you do. There are some tools that we're going to be releasing soon, so I'm going to showcase some of those in the ending part of our blogs. 1 second. In a new version that we plan on releasing soon, we have digital signal processing technology in a lot of our tools. And what this lets us do is have much more quick trends and moving averages. Instead of the slower and very lagging regular moving average, we have high-tech digital signal processing moving average. So if you put that on your chart, for instance, let's just say 20 period, you can see how rapid this is. Now, the Australian dollar was one of the stronger ones today. You could just simply wait for a pullback, and then when it goes back above that moving average, get in. You can see that would have had you in here around 72, kept you in here to 27. You know, the trend was up, pulled back right here, you're in here, small profit, in here, small profit. But the main reason I brought this onto the chart is to show you how we've put it into some of the other tools, like the containment bands. These containment bands are amazing, especially for scalpers and also for longer term traders to know when to stop trading with the trend. This will order any time frame data we want, but since we have a 5-minute chart on here, we're going to use 5-minute. I'm going to use our new digital signal processing, for lack of a better term, moving average, and we're going to put that on the chart. As you can see, it pretty much matches the digital signal processing one, and for scalping, this is a phenomenal tool, especially when you have a strong currency like this. When it hits the lower band, especially at the beginning of the trend, you're very likely to catch, a high probability move in that direction. It went from about 65 all the way up to 08. Nice 40 pip move. Now, just for illustrative purposes, let me change this to the old style, a much slower regular containment bands, and you're going to see that this band was not here at the time. See that? Notice the upper bands are much lower than they were before, and the lower bands are not at the price, and therefore you would not have had that buy opportunity. We're incorporating this technology into our FX trade signals. It's going to give much more accurate trade signals. It's going to find trades like this one right here that currently do not exist. And because it is faster, notice the upper band, we're going to improve our counter trend trades dramatically, because this didn't just go up and keep going. It went up, went sideways, kind of pull back, up, sideways, up, pull back a little bit. Watch as I adjust this to the digital signal processing line. Obviously, at the beginning of the trend, it did shoot through there, but then from then on out, every time it got to the upper band, pulled back, sideways, back. And if you had bought a pullback right here, you would have probably made or lost 5 pips. If you bought this pullback here, it did go up 8 pips. Worst case scenario in that is you lost 2 or 3 pips. You got a 40 pip move here, and you also knew when to get out of previous trends. Now, this is also going to be improving how we normally use it. That's using the hourly bands. Let me put that on here for a second. And I'll remove the regular DSP moving average here. Notice, as this price takes off, how slow the hourly catches up to price. It doesn't even come close to catching up. And notice, pretty much from 5:30 onward, it's above the upper band. Now, with the digital signal processing, it's going to catch up to price much quicker. See, and you're basically looking for counter trend trades at and above this level here. First sign of it stalling, you sell the pullback. You might have had a loss here, small win, small win actually, and then this one generated a huge move. And this is going to dramatically improve the signals. And I'll just show it in a couple of the other ones. Pound dollar was one that we showed before. Notice how it found the low, found the high. Without the digital signal processing technology, it's much slower, and you're going to have slightly less accurate results. In this case, it did find these two, but it missed that first move right here because the market was trending down and it shot up. And because this is so slow in reacting to current market prices, and the digital signal processing one is much quicker. Now, by the way, you can also use this, on different time frames too. 15-minute tends to work very well. You're looking to sell the top band, small profit, huge profit, nice profit. Didn't quite touch it here. Did touch it here. It went up 20 pips. This is a wonderful place to be looking to either get out of your trend trades or trade in the direction of the new trend. And also keep in mind that the moving averages are different. If you're looking to use this as a filter underneath the 15-minute bars, 20-period, digital signal processing moving average you're looking to sell, above it buy, this is where the 15-minute moving average is here on the digital signal processing. We are putting this technology also into our multi-map, which shows you the percentage of currencies trending up or down. Actually, this one is not the DSP. Let me change that here. Notice how the DSP had you start buying right here, and it also, found the high. Because this trend was such a violent one, it did go underneath the low here, but pretty much found the lows on these two moves as well. It had you looking for a new uptrend here at 75 versus 82. That's only 7 to 8 pips. However, the longer the time frame trend you're analyzing, the faster this is. I've seen it on hourly flip trend direction 15 to 30 pips sooner than the much slower regular statistical tools do. So a lot of our statistical tools that look at the percentage of currencies trending up and down are going to be dramatically affected, and they're going to change into a new trend direction much quicker. And so allowing you to get in on board violent new trends much quicker. So you can catch more pips. And when the trades don't work, you always have smaller losses. But when the trades do work, you're going to get into those trades 5 to 25 pips earlier, and that's 5 to 25 pips in your pocket that you wouldn't have had before. So this is going to be coming out probably early next week, Monday or Tuesday. I'm going to run it live the rest of the week, showcase it in class, and test all the values and release it when we're confident that it's working perfect. It's much more sophisticated. Uses very advanced, like I said, digital signal processing techniques that keep up with price much quicker than 1970s technology.